Welcome to IMG Insights, our webinar series that dives into topics relevant to multifamily real estate to help you make more informed investment decisions. Today's discussion will touch on a few market trends we're seeing in the first quarter that represent a major departure from what we've seen over the past several years. Reporters from national publications continue to interview IMG principals and directors seeking our expert insights into the trends and forecasts shaping the multifamily market. Today, we'll draw from our most recent news interviews and articles and provide you with some valuable information around these topics that should give you a better understanding of the changing investment landscape. For the conversation today, we've brought together Carlin Conklin, IMG's Principal Co-President and COO, Michelle Rivnak, Managing Director of Asset Management, and myself, Dave Nicholson, Director of Investor Relations. Our discussion kicks off by highlighting a recent request from Multi-Housing News for IMG's perspective on what apartment operators should be paying close attention to right now. Of course, rent growth has dominated news headlines over the last 2 years, but Carlin, what do you see the narrative shifting to right now?
Thanks, Dave. Let's start with 2021 as we came out of the pandemic. Average national market rate rents posted a double-digit record, and then 2022 came in second place at a national level, averaging over 6% annual rent growth. In our investment submarkets, we were seeing 12%, for example, in San Antonio and 15% in Greenville, South Carolina. This year, rent projections are modest, depending on the market. As I've shared with Multi-Housing News in several recent Viewpoint articles, investors and operators need to shift to a new paradigm. In other words, it's not just about rent growth. The focus now is on the importance of driving net operating income, or NOI.
Carlin, it does seem like IMG was ahead of this national narrative, shifting to that paradigm last year, the focus of lifting NOI through strong asset management. Michelle, what points would you make as you're looking at Q1 operations from the perspective of the asset manager?
Operating expenses outside of owner control have increased more rapidly in recent years. Rising costs in property insurance, taxes, construction materials, and on-site payroll have outpaced inflation. We've done a few things internally to address these concerns. Insurance has become a major issue, and we've been tackling it from all angles. We brought in a compliance and risk coordinator who has been diligently working on property policy renewals. He also monitors renters insurance programs so that all residents are always covered in case of an incident. The other benefit is being able to complete claim adjustment in-house and in a much more streamlined and cost-effective manner. Looking at property taxes, we challenge every single billing, utilizing local professionals to keep these expenses as low as possible. The last comment I'd make is about site payroll, which always seems to be the first one on the chopping block for cuts. However, my thought process is that the team members on site are the ones who are driving this success, and paying solid wages to the right people is the best way to achieve our expectations. Cutting payroll reduces the talent pool and creates open positions. Being short-staffed or using temps reduces service to the residents and has a negative longer-term impact by reducing online reputation scores and lease renewal percentages. My perspective as an asset manager is to keep income growing faster than expenses, whether we're in a high rent growth or slow rent growth market. My team has been approaching controllable and non-controllable expenses quite creatively.
That's excellent perspective, and it goes beyond the surface level and it dives into some of the deeper mechanics for what you're working on the expenses. I'll add that along with that, interest rates have escalated rapidly during 2022 as the Fed aimed to curb inflation. This, of course, forced cap rates to rise, and asset values across the U.S. have dropped somewhere between 10 to 18%, and that started in Q4. We know NOI drives value, so to the degree we can control NOI, we can control value in a market where cap rates are rising and values are generally eroding. Well, Michelle, on a somewhat related theme, you were recently contacted by Globe Street about changing asset values and declining rent growth. Can you recap some of that conversation for us?
Sure. I pointed out that just focusing the discussion on higher rents or lower rents is only reporting half of the story. Expenses are the other variable that determines net income. For some operators, the higher income of 2021 and 22 masked the problems with rapidly rising expenses if they weren't being monitored well. If owners were just raising rents instead of creating renter-focused business plans, they could be struggling this year. With so much new supply on the market, prospects are expecting more quality for the rents they are paying. We budget for a robust resident retention and community engagement program to create that value at each site.
That's true. And not only are residents expecting something else, but we see a difference in what buyers and sellers are expecting. We've entered a new environment where values are changing, and we seem to have this divide between buyers and sellers. It's become evident that what appears to be an obstacle as this divide widens. So let's finish the conversation talking about how opportunistic investments are made. As we know, market corrections can create some great acquisition opportunity, and IMG has been seeing deals coming to us off market. In fact, our director of acquisitions, Kevin Crook, was recently interviewed by Wealth Management magazine for insight on what IMG's approach has been here in Q1. Carlin, could you speak a little to what Kevin talked about? Are there benefits or challenges with transacting off market?
Sure. Thanks, Dave. Rising interest rates have significantly impacted values and deal flow. Today's concern is value. Cap rates have increased with the increase in interest rates, and the loss of value in some markets has been significant year over year. The challenge we have now is getting buyers and sellers on the same page when it comes to pricing. Whether the property is fully marketed or negotiated off market, many sellers are surprised how much value they've lost over the past 6 to 9 months. In some markets, as you've said, Dave, that decline can be upwards of 10 to 18%. But with that said, price is only one component of the investment. As buyers, off-market deals provide us with some benefits like better timeframes and more flexibility to accommodate our investors' 1031 exchanges. Solid off-market opportunities have always been hard to find. Our reputation and the relationships we have in our investment markets have been a big advantage in securing off-market deals. Sellers are most comfortable working with sponsors with strong track records.
Yes, and that's excellent additional color, Carlin. Are there any final thoughts you'd like to share in general?
Yeah, for those of us who have been in multifamily and multifamily operators through multiple cycles, the NOI narrative actually is a familiar conversation. We knew better than to underwrite for sustained double-digit rent growth. We recognized interest rates would have to increase from a historical low, and we also knew compressed yields were coming. In fact, the forecasts we've delivered in these national publications in recent years have proven pretty accurate. Maybe it's why we're not fearing the current market correction or the rise in cap rates. We understand that commercial real estate will always be cyclical. We don't fear it. We know how to take advantage of it for the benefit of our investors.
True. Real estate investing has always been the long game, and our strategy here at IMG is certainly long-term. We plan to stay disciplined and continue with our conservative cash management plan in place. Well, thanks again to Carlin and Michelle for expert resources, not just for our own investor group, but for the national press community as well. We appreciate the great discussion. To catch up on all recent press interviews with IMG's leaders, visit our website's news section and subscribe to receive our announcements on upcoming investment opportunities. It was a pleasure sharing these market updates with you today. This concludes our Insights webinar. Thank you all for watching.